January 2025 is here, and while the markets are unpredictable, at least we can always count on a little global chaos. With Trump throwing around tariff threats like a kid with a new toy, I figured it's a good time to check in on my portfolio before the entire world economy starts playing defense. This past year has been all about consistency, discipline, and learning. I've focused on building a strong portfolio that balances growth and income, ensuring steady, long-term compounding. Instead of just throwing numbers at you, let's go over how things are shaping up, my allocation strategy, my performance, and what's next.
My main goal is to blow up and then act like I don't know nobody.
There's nothing flashy about my investing strategy. I'm not chasing the latest hype, I'm not glued to the charts trying to time the perfect entry, and I'm definitely not flipping stocks for a quick payday. I'm in this for the long run, and my entire approach is built around that. Every week, no matter what the market is doing, I'm adding to my positions. Some weeks, it feels like a great move, and other weeks, it just feels like I'm throwing money into a pit. But it doesn't matter, because what actually works is staying consistent and letting time do the heavy lifting. A lot of people hesitate waiting for the right moment, but in reality, the longer you wait, the more time you lose. Time in the market always beats trying to time the market. I don't care if stocks are at all-time highs or if people are panicking over a correction. I buy when I have cash to invest and I let it ride. I keep my investments spread out across 3 main ETFs, each serving a role in my overall strategy. VU at 50%, the bulk of my portfolio focused on steady long-term growth. SCHD at 28%, a reliable dividend pair that balances growth with income. And lastly, V1M at 22%, a solid mix of yield and price appreciation. I haven't changed this setup because it works. It gives me exposure to both income and growth, ensure my portfolio grows over time while generating a steady stream of dividends. And to expand on these positions even more, I currently hold 14.65 shares at an average cost of $504, and with VU, my position is worth $8,161, and it's up about $783 or 10.61%. It's not just about the share price increasing, VU also contributes $98 a year in dividends, which I reinvest to keep the compounding going. I have no plans to change its allocation. It's a strategy that's proven itself over time, and it's working for me now. Right now, I own 165 shares of SCHD at an average cost of $27. My position is valued at $4,604, up about $192 or 4.36%. The bigger story here is the $164 in projected dividends for the year. That's income I don't have to work for, just steady payouts that I can reinvest to grow my position even further. SCHD isn't flashy, but that's exactly why I like it. It does its job and it does it well. Lastly, I hold 25 shares of V1M at an average cost of $120. My position is worth $3,435 and it's up about $339 or 10.95%. It's on track to pay me $90 in dividends this year, which just like SCHD will be reinvested to keep the compounding going. A lot of people overlook dividends because they seem small at first. A few dollars here, a payout that doesn't even cover a meal, but that's missing the point. The real power of dividends isn't in the amount you collect right now, it's in what they become when they're consistently reinvested over time. Right now, my estimated annual dividend income is $353 with $88 expected in the next 3 months alone. That's $88 that goes straight back into buying more shares, increasing my payouts even further. Dividends are just a passive stream of income, they are a shortcut to faster compounding. The more I reinvest now, the bigger my payouts become later, and the less I have to rely on future contributions to grow my portfolio. This year has been off to a solid start. My year-to-date return sits at 3.13%, and since I started investing in January 2024, my total return is 8.90%. My portfolio is now worth $16,465 with an unrealized gain of $1,329. I didn't time the market, I didn't jump in and out of trades, I just stuck to the plan. Right now, we're in one of those wait and see periods. Interest rates are still a major discussion, inflation isn't fully settled, and with the election year in full swing, there's a lot of uncertainty ahead. But that's just noise to me. I don't build my portfolio around political cycles or short-term market swings. The market moves in cycles, and the best way to handle uncertainty is to keep investing and take advantage of opportunities when they come. If stocks drop, I'm buying more. If things keep climbing, I'm still buying. This strategy doesn't change. One thing I'm watching closely is dividend growth trends. Companies are constantly adjusting payouts, and staying invested in reliable dividend ETFs ensures I keep benefiting from those increases. Nothing about my approach is changing. I'm sticking to my plan, investing weekly, reinvesting dividends, and letting compounding do its thing. One of my main goals this year is to push my annual dividend income past $500. It's a milestone that represents something bigger than just a number. It means my portfolio is starting to generate real cash flow, the kind that in a few years will cover expenses without having to sell shares. The market can do whatever it wants. I'm still buying, still reinvesting, and still focusing on the long game. Investing isn't always exciting. Some weeks it feels like progress is slow, other weeks everything moves up at once, and it feels like you're a genius. But at the end of the day, it's about showing up week after week and letting time work in your favor. I'm not here to act like I have all the answers, I'm just showing what I'm doing, what's working, and what's not. If you've got thoughts, drop them in the comments. Let's talk real investing. The wins, the mistakes, all of it. That's all for now, guys. Appreciate you for watching, and I'll see you guys in the next one. Make sure to follow me on X @MushG, and I'll see you guys later.